All right, hello everyone. It's Tim Davis coming to you guys with another market review. I want to start this week off a little differently, just to give some insight on some other tools or indicators or uh, ways that we can approach and take a look at this market and what we could be in store for in the near term and the longer term, as far as overall equities market. I'm going to start off taking a look at the dollar index. And one thing I want to point out is how the dollar has been in a downturn since about October. And I want to show you how it relates to our overall markets. So here is a weekly chart of the DXY, which is the dollar index. I say over the past year or two, since 2021. And what I want to highlight right now is the high that the dollar reached, or the DXY reached back between September and October, and what transpired when that happened. So here is the area of the high around October, and then we see what happened since about mid-October up until about now, where it looks like there's a possible pivot point happening in the dollar as we speak. Looks like we made it back down to a 61.8% Fibonacci retracement level. It looks like we are starting to reverse this downward trend. Subsequently, if you look at the full stochastics in oversold territory on this weekly chart, and it looks like it too is ready to start to hinge back up. Wins percentage, it too looks like it's ready, starting to hinge back up. CCI, it looks like it is still waiting. So once all of these start to hinge up, looks like the weekly chart starting to show some strength in the DXY or the dollar. Now I'm going to take you to a weekly chart of the major indexes and show you the comparison. So keep this in mind. Now let's look at a weekly chart of, let's look at the S&P and the Dow first of all. So let's look at the SPX. Here's the weekly chart of the S&P 500. And I want to highlight the same time frame. So let's highlight around October. Around the same time around October, around first or second week of October. Here we go. So around the same time frame that the dollar was going down, right here around about that second week of October, the S&P started to rise. And if you notice, I got this dashed line up here because that is a strong level of resistance. S&P started to rise on the same time that the dollar was falling. Rose up to that level of resistance, pulled back, and then continue pull back to a level of support, and continue to rise right back up to this level of resistance. So overall, since the dollar was dropping from October to now, the U.S. stock market or the S&P found a way to rally back up to a level of resistance. And if we look at the NASDAQ, we're probably, let's look at the Dow Jones, we'll probably see the same type of movement. I got some previous lines drawn in here, and there's reasons why I have these lines here, because even though the markets did rise from October up until now, they only rose back up to a level of resistance. And as you can see, the Dow clearly shows you this strong level of resistance as I have highlighted here. Every time the Dow has got up to this point of resistance, it has found a way to reverse its course. And this has been going on since February, or since early part of 2022. Every time the Dow has got up to this point, it has found a way to reverse. All the indicators are showing reversal signs on the Dow, and more than likely the other indexes will eventually follow. Look at the CCI, is already starting to show levels below the overbought territory. Wins percentage already showing lower highs created in the oscillators. And again, like I showed you, look at what happened here in October with Dow. Also, October had a nice rise from October to now. Only back up to this level of resistance and could not break this level. It's just been struggling to break this level. And right now, we're just hovering right at this level of support, level of resistance. Now, draw your mind back to this dollar again so you won't get it, lose the picture of what I'm trying to show you. Is that with the market showing at levels of resistance, look at the dollar is showing at level of support. And every time the dollar has found support, and if it started to rise in a big fashion, normally opposite of what the market does. So with the dollar sitting at a level of support and the overall markets, go back to the Dow Jones again, sitting at a level of resistance, and this is the weekly chart. I don't think the markets have much more room to the upside from this point. I think we're going to start to see some reversals as the dollar starts to rise back up towards a level of support, which is, I think the dollar, level of resistance, which I think the dollar could possibly do over the next course of a couple of months. So with that said, again, the dollar always shows when percentage starting to hinge higher, forecast starting to hinge higher. Now look at this reversal candle right here, reversal pattern on the dollar like it's ready to hinge higher. And we could start to see a rise in the movement of the dollar over the next several weeks, which would in turn probably equal to some weakness in the overall markets, overall indices. Wanted to point that out so you guys can see that even though there has been a nice little rally that folks probably been trying to hang their hat on, we are not out of this bear market yet, folks, not by a long stretch. So just wanted to point that out. So I would not be surprised over the next couple of weeks to see the market start to melt lower. I would not be surprised to see that happen. Now, if the dollar finds a way to just break down and continue to go lower, then that could be positive for the markets. But it just looks totally like a reversal point here. And again, if you look at SPX, and it totally looks like a level of resistance is being tagged. And as you can see here, even with the S&P, every time we have hit this level, we found a way to reverse. We found a way to reverse. And it's like we are probably going to do the same thing because former resistance, it was resistance over here. It was support over here, former support. Now it's becoming resistance. Hit it here, pull back. Hit it here, pull back, hit it here. We could see a pullback because this was support. Now, every time we travel up to the level, it becomes a level of resistance until we break it in a meaningful fashion. So will we break it in a meaningful fashion? We have to see what happens on this week. But there's a high probability, looking at the dollar and looking at the other indices, that this is setting up for a reversal in the overall markets. Now, so as we looked at the dollar index, looked at the S&P and the Dow, I'll draw your attention also to the VIX, because the VIX has shown some interesting action as well. So the VIX has been muted right around this area here. So if you see this highlighted box here, this highlighted box has been a strong level, a strong area of support for the VIX since, I say, November of 2021. Every time the VIX has even got close to touching this level or dipped down into this level, we started experiencing some strong rallies to the upside. It happened here. It happened here. It happened here. Now the question is, will it happen here as well? And I mean, every time we dip down into these boxes, every time we dip down these boxes, we have strong rallies. And every time we had dipped down into these boxes, the rallies were pretty significant. And each time we rallied up into, and this is going to be something to pay close attention to, because we got as high as one point up to around close to 40. And I think what's going to happen is this level, we could see short a level like that, matching these high points. We could see a VIX up to 30 over the next couple of months. So that's something to pay attention to, and keep in mind that if we do start to see a VIX pivot out of this box area, or out of this level of support area, we could see the VIX start to rise and potentially make it back up to around 30. You got to see what happens there. Does it? Because these are lower highs that's been created every time we had this bounce. Do we travel up to this level around 30 and pull back here, or do we break through this level? We have to wait and see if any of this transpires over the next couple of weeks. But everything is setting up right now as though the market rally that we've seen since October could in turn turn out to be a bear market rally. All right, that's all I really wanted to point out, folks. I wanted to point this out to show you guys what the setup looks like and show you guys the probability of this market continuing to rally from this point is very, very slim, very, very slim. And there's a lot of things geopolitically happening that can also support what the technicals are showing us. Ukraine war is still not any better. There's tensions between, as we all know, especially what happened this weekend, there's tensions that's still going on between China and the U.S. And that tension, I don't think it's going to get any better anytime soon, especially with this new spy balloon that apparently the U.S. shot down over this past weekend. So again, folks, be careful, be mindful. We're still in the bear market. We had a nice little rally since October. Be very, very careful if you're trying to ride this rally further, believing that we are in a new bull market. I don't think that is the case. All right, that's all I wanted to highlight this weekend. Stay tuned for what happens on this coming week. We still have more earnings coming out, and there's still a lot of data that is going to unfold. And as you can see, with the Fed meeting also on this past week, the markets are thinking one thing, but the Fed was consistently saying that he has no intentions of easing off just yet. He tried to let markets know that he continues to anticipate rate rises, even if it's 0.25%, for now. So the markets are looking at a pivot point, and maybe even not only a pause in rates, but a decrease in rates. I don't think the Fed is on that page just yet. So with the Fed still showing a little hawkishness, the market's thinking because of the data that's coming out that the Fed is going to pivot. I don't think that's going to happen. So also, like I said, there's a lot of things that's fighting against what the markets are trying to believe. All right, folks, until next time, Tim Davis signing off. Enjoy the rest of your weekend. I'll catch you guys on the next video.